Welcome everyone to the session. I'll just quickly introduce you to Get Setup. Get Setup is a platform for the seniors and by the seniors. We are educated and a training organization. We do not sell anything or receive kickbacks from any product or service. This session has been recorded. So if you want the recorded session, you have to write an email to help@getsetup.io. You'll receive an email right after the session, and for that you can share your feedback there as well. The stars have been recorded as 4 by default, but you can correct it by your accordingly. Chat is available below, so if you have any kind of queries, please feel free to paste it in the chat box. Please mute your mic when you are not speaking to avoid disturbance, but if you have any kind of queries, please raise your hand or you can unmute yourself. Our mission is to create economic opportunity for older adults and help them to learn tools and skills needed to stay connected and live healthy lives. We have classes across technology, health and fitness, mental wellness, singing, dancing, social hours, guest speakers, medical lectures, ambassador lectures, and much more. You'll get all these sessions on our site, that is www.getsetup.in. I'll be uploading the link in the chat box. We have WhatsApp and Facebook groups. So if you want the updates of each and every class, you'll get it there itself. Please do join. If you know others in your organization or friends or family who might benefit from these classes, please spread the good word. Please let us know if you have any kind of new ideas or suggestions for the classes. Or if you want to host a share.
It's okay. It's very less.
I'll be uploading the link in the chat box as well. Thank you.
Thanks, Isha. So as usual, for my class, if there are any queries, since I'll be mostly sharing my screen and doing this slideshow, don't hesitate to interrupt me and ask questions. Whatever you'll post in the chat box, I will take it up, but it will be taken up only towards the end of the session. And of course, at the end, we always have this feedback. So most welcome to ask any questions or any queries at any point of time. Okay, so good evening once again to all. We've got two new participants. Welcome. So as I was explaining, Umaji was there earlier. This is the first such session on GST, not only by me, but also by Get Setup. So this was something which came to my mind and thought, why not take a chance? And maybe there'll be some people who will be interested to know more about GST. This is like, you can say it's more of a basic GST course, understanding GST, but we are not going into the complications because it can be very, complex. And there have been many rules, many provisions which have undergone changes. So we'll keep it simple. We'll see how it impacts us. What is actually GST? How does it work? We'll see a few sample invoices as well. And, if you have your experiences or any questions, whatever, you can feel free to ask. But before I get into GST, I would like to spend a few minutes on the overall taxation structure in India. So rather than going straight away into GST, very important to know what are the taxes in India. We're not going to spend too much time. What are the different types of taxes and where does GST fit into this? We'll spend a little time on the background because, we've been talking about this GST for many years now. Good afternoon, Sheila, welcome. And finally, it got implemented. It got introduced in India on 1st July 2017. But the work had started way back. It was more than 10, 12 years. And, because of its complexities, because a lot of stakeholders were involved, required political consensus, finally, it saw the light of the day on 1st July 2017. So it was not something which crept up overnight, but there was work in progress, all these years. Okay, let's get going. We have Bonnie and iPhone also there. So let's start. Let's start the screen share. This has been done by Isha, so I'll move ahead. Okay, just a quick update for those who are not there in my last session. As we know, there has been a big mega merger of the public sector banks. This was effective from 1st April of last year. So for those who are having accounts with the banks mentioned in the first column, Andhra Corporation, Oriental Bank, United Bank, Allahabad Bank, Syndicate Bank, Vijaya Bank, Dina Bank, uh, please be informed. You all also must have got communication from your respective banks. So, for example, if you are having investments in mutual funds, you need to inform the mutual fund house. It will have specifically it will impact those who are having who have given mandates for SIPs, because what happens is, as you can see, there is an IFSC code change in all cases that needs to be communicated to the to your mutual fund house. So, for example, if you have given a mandate and you have a redemption coming up, there should not be any disruptions. It should not go to the wrong account or it should not bounce back. So, I presume most of you all would have acted on it, but if you all have not acted on it, please do so. And also for the last two banks, Vijaya Bank and Dina Bank, there have also been changes in the bank account. So that also needs to be communicated to your mutual fund houses and all other places, your banks, your if you have taken bonds from the issuers of those bonds. Basically, they need to be intimated about your new IFSC code and your new bank account, if any. So that's just, I thought I'll just share this info. We did it in my last session, doing it again. Let's now get started with the topic of the day, and that is GST, Goods and Services Tax. Okay, understanding GST. One market, one nation, one tax. That was a tagline. And finally, it came into effect. It became a reality from 1st July 2017. So what I'm going to cover today, and as I said, we're going to keep it as simple as possible. Don't want to complicate matters. Just to inform all the participants here that I was part of the task force which was appointed by my uh, employers in L'Oreal to oversee and implement the GST in 2016 and 2017. We had this, so I've gone through this. I've got experience, but as I said, it's been 3 years, 2.5 years now, and there have been quite a few many changes in the rules and the provisions which have come about. Of course, as I said, this is going to be a very simple explanation, a simple analysis of what all is GST and how does it affect people like you and me. We're not going to go into the complexities because there'll be too many things to discuss. Okay, so what are we going to talk about? We said we are going to talk about the taxation structure in India, more specifically, what are the direct taxes, what is a direct tax, what is an indirect tax, and what are the direct taxes today, what are the indirect taxes today. There were a host of taxes and levies, totaling around 17. There were 17 taxes and levies which were merged into GST. So those 17 taxes moved off and we had just one GST. So which were those taxes which were subsumed under GST? Now, of course, the whole world has gone in for GST with the most notable exception is US, but almost all the countries, 30 years, 40 years, they have been, 10 years, they have implemented GST. So obviously there are massive benefits. So let's have a look and understand what are the advantages of having a goods and services tax. Once we get into that, we'll see what are the items which are not under GST purview and possibly try and explain why they have not been kept under the GST regime. There are some items which are totally exempt from GST, essential items. Let's have a look. What are the different taxes which are applicable under GST? Remember when GST was being introduced or before implementation, uh, you know, they were talking about just having one rate. And as you all know, most of you all know that in most of the countries where we have GST, there is just one rate. So it may not be known as GST in all the countries. It could be known as value added tax, or it goes by some other name, but basically you just have one rate in other countries, in most of the countries, or you could have two rates. But in our case in India, because of its complexities and because of genuine reasons, we have as much as 5 slabs. We'll see that. And actually the slabs are much more because there's also a cess on what they call luxury goods or sin goods. So we'll have a look at that. What are the slabs? And then we come to the core of, what are the core features of GST, which is ITC, input tax credit. So what is input tax credit? How does it work? What is the benefit of, you know, getting this input tax credit? And then lastly, we'll close with who needs to register, what are the thresholds for registration, and we also have this scheme known as composition scheme. So, you know, taxpayers up to a certain level, certain threshold can opt for this composition scheme, but there are certain conditions attached to it. So, this is what I'm going to go through in the next 45 minutes. But again, as I said, if you have any questions or queries or anytime you feel free, please feel free to interrupt. And questions or queries in the chat box will be seen and answered only at the end of the session. So let's get started first with direct and indirect taxes. So I think most of you all would have studied this way back in your when you're doing your management courses or in your colleges. So basically, what is a direct tax? Let's get started with the basic. So direct tax is defined as a tax where the impact, the person who bears it, the impact and the incidence, the person who's responsible for making the payment or making the tax payment is the same person. So basically, it's a tax levied on a taxpayer who has to pay to the government. He cannot transfer it or he cannot pass it on to someone else. And as we all know, the prime example, the biggest example of direct tax is income tax. What is income tax? Income tax is levied on the income which is earned by an individual. He or she has to pay that tax. There is no scope, there is no chance whatsoever of the individual assessee passing this on the burden of the tax to somebody else. There are other variations of the income tax. For example, you have corporation tax, but that is again, it's a sort of income tax. You have capital gains. This again is part of income tax. In the earlier days, some of you all must have recollected that we had estate duty, which has been abolished. That was a direct tax. We had wealth tax. Wealth tax also got abolished. Then we had gift tax, which was abolished, and then it was again reintroduced, and but it's coming as part of the income tax. So today it's income tax, which is a direct tax. So it depends on the individual, on the income or the profits, or if it's a company of the individual, and the higher the income, the higher the profits, the higher is the tax payable by the individual or the company, as the case may be, by the entity. It could be a Hindu undivided family, or it could be a partnership firm. Property tax today is another example where it's another example of a direct tax. Now, uh, that brings us to an indirect tax. And I think it's very obvious what is an indirect tax. So basically, very simple again, where the impact and the incidence of tax does not fall on the same person or on the same entity, which means that the burden of tax can be passed on by the taxpayer to somebody else. So what are the prime examples of indirect taxes? Today, of course, is GST. Prior to 1st July 2017, there were a plethora of taxes. We'll come to that. We still have customs duty. That's an indirect tax. And then we also have, though excise duty and value added tax have been abolished for most of the items, there are still certain items which are outside the ambit of GST. So we'll come to that. I had explained in my first slide. There are items which are outside the purview of GST. Those still attract VAT and excise duty. So basically, if you're taking the example of GST, what happens is you go to a restaurant, you pay for the food and the service which is rendered. If you see the bill, and I've got a bill, you'll be shown an item called GST. It will come under two subparts. There'll be a CGST and there'll be a SGST. But that's a GST. Now that amount of the tax is being borne by the end consumer. Okay, which means the impact of that tax is on the end consumer. But the end consumer is not paying that to the government. Who's paying to the government? It's the restaurant, or it could be the hotel where the restaurant is located. They are supposed to levy this tax on the bill, on the food which is served in this case. They recover it from you, the consumer who goes to eat in the restaurant. They collect it from you, and then they pay to the government as per the rates and as per the rules prevalent. So which means this is an example of an indirect tax. The impact is on one person, which is the end consumer, and the incidence, which is the person or the entity responsible for paying GST, is the restaurant owner or the hotel owner. Clear? So basically, this is the difference between a direct and indirect tax. And for countries all over the world, you'll have a mix of direct taxes and indirect taxes. Now, as we can see in the case of direct tax, the more the income, the more the profits in case of a company, the tax keeps on increasing. There is a surcharge, the rates are higher, etc., etc. But in the case of indirect tax, the rate is the same. So whether it's a poor person or a very rich person who goes to a restaurant and eats, the tax which is payable by him or by her remains the same. So it's equal. So a rich person also pays the same amount of tax while buying whatever, ice cream or toothpaste or whatever. And the same amount is paid by a person who's in the lower middle income group. It does not distinguish between the incomes of the individuals, and that's the difference. Before we get into GST, let's see what are the revenues earned by the government, because obviously taxes are an important source of revenue for the government. They need for running the various welfare schemes, for armed forces, for health and infrastructure, etc., etc. So what is the component, or which is the part which is coming from direct taxes and how much is coming from indirect taxes? Yeah, so this was taxation in India. Direct tax, income tax, is between the government and the taxpayer. Taxpayer pays to the government. If you take indirect tax, GST for example, the government collects it from the retailer and the manufacturer, who in turn collects it from the taxpayer. So ultimately it's a taxpayer who's paying, but he's paying not to the government, but he's paying to the retailer or the manufacturer. And then that in turn is paid to the government. So this is the difference between the direct tax and indirect tax. I hope it's very clear now. It's very simple logic, but very important to understand the essential dynamics and the differences between the two. So just as a matter of statistics and being a finance person, I always like to share data and figures and try to make it as simple as possible. These are the figures quoted in the Union Budget 2021, and these are the revised estimates for the current financial year. As we know, the current financial year is ending tomorrow, 31st March. So as you can see here, indirect taxes actually contribute slightly more than half of the total tax revenue of the union government. So that's interesting. So, and this has actually increased over a period of time. So currently we are talking about 52% of the tax revenues coming from indirect taxes and the 48% coming from the direct taxes. And if you see the indirect taxes, GST is the biggest chunk, 27% comes from GST. So out of the total tax collection of the government, of the union government, little more than 1/4 is coming from GST, and this is only expected to increase in the years to come as the system stabilizes, as the tax leakages get plugged, as the compliance increases. And if you see the amount, we're talking about 5,15,000 crores for the year. So it's huge. Okay, we've covered the background. I think let's get into the topic of the day, and that is GST. And again, saying that you're keeping it as simple as possible for all to understand. And discussing and sharing something which is relevant. So we are not talking about procedure, we're not talking about filing of returns, doesn't make sense. Unlike an income tax, where people are interested in knowing, most of us, I presume, will not be registered under GST. There'll be very few of us. So we're not talking about those aspects, but we'll try to cover the definition, the concept of GST for our profile. Okay. So I said in the beginning that there were a total of 17 central taxes as well as state taxes, which were discontinued and they were merged into GST. Now, this is not an exhaustive list, but as you can see, the main one, the central levies, excise duty, we all know it's no longer there, except, again, I repeat, for those items which are outside the ambit of GST. So today, if you're buying a laptop or a computer, you're not paying excise duty. You're paying just GST. Second, so excise duty was levied on manufacture of goods, on production of goods. Service tax was levied on supply of services. Today, if you see, you take whatever services of a consultant, for example, he will not charge service tax, he will charge GST. Of course, provided he's registered under GST, that's a different matter, and we'll come to that. So service tax again gone off. And then, for customs duty, so customs duty is a duty on imports, those remain because it's not linked with, selling of goods or services. So but we had additional customs duty, which was known as CVD, countervailing duty, special additional duty. Those also have been eliminated. On the other hand, we had state levies. We all know VAT. In the earlier days, we had sales tax, and then I think it was in 2004 that we moved from sales tax to value-added tax. Now, the value-added tax also has given way, and it has been merged into GST. So we had value-added tax on the sale of goods in the state. We also had CST if it was interstate sale. And we had, for example, octroi. It used to be a big nuisance. I know we used to have octroi. Maharashtra was the only state which continued to have octroi right till the very end. Octroi has been abolished. In some other states, we had entry tax. So there's no entry tax and there's no octroi. It's got merged into GST. Then we had luxury tax, fancy hotels and some other items. There used to be a luxury tax which used to be levied by the state government. It's no longer there. Entertainment tax on your, you're watching some shows or dramas, you're watching movies, you used to pay entertainment tax. You had the tickets which were showing what is entertainment tax, and then you had purchase tax also. So these taxes have gone off. We just have GST now, except for certain items which are outside the ambit of GST. Okay. Okay, let's move ahead. 26 now. Yeah, fine. So before we get into the basics and discuss further, what are the benefits or what are the advantages of GST? Let's try and understand that. It's possible that all of these have not materialized, but largely they have happened. And as I said, only when the systems further improve, the leakages are reduced, compliance is increased, we'll get the full benefit. But a significant chunk of these benefits have already started accruing to us. So the second point I already made, we had 17 indirect taxes. Now it's reduced to 1, so it makes life simple for everybody. GST, the big advantage is that it eliminates the cascading effect on tax. Cascading effect of tax is nothing but tax on tax. So under the earlier system, there was a tax being paid, and then at the next stage, at the subsequent stage of sale, there used to be another tax, and it was not possible to take a set off or input tax credit for the tax earlier paid. So basically, it was a tax on tax. There is no tax on tax now. We'll see in an example later on in the presentation. So basically, what has GST resulted in? It's resulted in a very simplified structure. It has resulted also in a uniform tax structure. See, let's understand, the tax rates under GST are uniform throughout the country. In the earlier avatar, we had excise duty, which was a tax on manufacture. It was uniform because it was levied by the union government, by the central government. So there was less confusion. But we had VAT, value added tax, in the states. And since it was under the jurisdiction of the states, you had different states levying different tax rates on the same item. So you can imagine the complexity and the confusion it would create, especially for entities who operate pan-India across states. So you need to have expertise in each state to understand the tax laws of that state and see, for example, cosmetics, you have a certain rate in Maharashtra, but you go to Gujarat, it's a second rate, you have a third rate if you go to Delhi. All that is a thing of the past. If you're selling cosmetics today, by and large, the tax rate is 18%. So it makes life simple. It simplifies the whole tax structure. Yeah, so the tax makes it the compliance is also a less, because in the earlier days one used to it was required to register under each of those acts. uh, multiple acts. And as I said, there were different procedures, there were different rates. All that it's not required now. You need, if you're operating from more than one state, then you need to register under each of the states, in each of the states. But the fact remains that the rules and the norms are the same. They don't vary from state to state. GST, and it's a big achievement, especially given the complexities of a country and the population, the volume of transactions. GST is a fully online tax system, which was not the case earlier. So, which means that it results in more transparency to the entire tax process. Of course, which also means that the next point which I put there, it means that the scope to avoid or evade taxes gets significantly reduced. And once that happens, what happens? What is the end result? The result is your tax revenues increase both at the central level as well as at the state level. Because the tax rates are rationalized and you get input tax credit, it is also supposed to logically result in overall reduction in the prices, reduced overall tax, which means the MRP gets reduced. That, of course, has been, it's not happened the way it was expected. But the government is keeping tabs on companies and on products where there is, even when there was a transition from the old regime to the new regime, if there was a reduction in the tax for a particular commodity, there was a regulator which was checking whether the benefit of the lower taxes has been passed on to the consumer or not. And last but not the least, uh, helps to regulate the unorganized sector, the sector which is not coming in the tax regime. They're not registered, they're not paying tax, because one of the uh, prime principles of GST is that one has to avail of the input tax credit to avoid tax on tax, and one has to be registered. So if you don't register, you don't get the benefit. So per se, it results in getting more and more people, more and more traders and service providers and manufacturers, small time businesses under the tax net. So it regulates the informal sector or the unorganized sector, as we call it. Okay, fine. Okay, so we in the beginning spoke about certain items which are not under GST. So I think you all must be aware of this. So one is alcohol that's been kept outside. Alcohol is for human consumption. So if it's for industrial use, it's coming under GST. But alcohol for human consumption has been kept out of GST. Second and the most, so these are the two prominent items: petroleum products, crude oil, petrol, high-speed diesel, ATF, etc. Those are all outside the purview of GST. There are various reasons for it. And just recently, I read somewhere where the finance minister said that it's almost, though we're trying to get these under GST, but I think there was a comment made that even for the next 10 years, they'll be outside the purview of GST. And, the reason is that, one of the probable reasons is that, once you bring these items under GST, the rates are fixed. So you cannot change, you cannot increase it. Whereas if you take items like alcohol, where there is a significant demand for it, even if you increase the taxes, there is a segment of population which is willing to buy that alcohol. So it's probably kept as an item where the tax revenues would increase for the states as well as for the government. So it's been, in a way, it's not deliberate. It's obviously it's not kept under GST, and even if you ask me, highly unlikely that these will come under GST in the foreseeable future. It will continue in this way because the governments need revenues, and on these items, even for petrol and diesel, you'll have people who use their cars, who need petrol. So, and we have seen the news, we have seen the debates on the increase in the petrol prices, even though the international prices of crude were coming down. And today, as you know, the basic price of petrol is significantly lower. It's the taxes and the levies which make up the bulk of the end price, which you and I are paying for buying diesel or petrol. So for reasons, for revenue reasons, it's outside the purview, and I suppose it's going to remain this for some time. So let's not think that one day it's going to come under GST. And it's got nothing to do with the government. It's irrespective of the government. Electricity also is outside GST. Okay, moving ahead. Now, as I said, there are certain items which are exempt from GST, and these are all essential items. Again, it's just a representative list. It's not the entire list. So you have daily use items, essential items. You have bread, eggs, for example. You have fresh milk, buttermilk, lassi curds, fresh fruits and vegetables, hearing aids, fish and meat. Now they're saying fish and meat other than frozen or processed. So if it's fresh fish and meat, there is no GST. But if it's frozen, processed, then GST is payable. Food grains, cereals, and also services very relevant for us. Medical services today there is no GST. You go to a doctor, you go to a hospital, you'll not find any GST because those are exempt. The service is exempt from GST, and similarly, it's got to do with educational school fees for your children or grandchildren, college fees, higher education. It's all totally exempt from GST. So these are the parameters under which GST functions. Next. So again, trying to keep it simple and not wanting to complicate. So we have GST. Now, what are the tax types under GST? And as you would have seen, you bought products or you have taken some services. In the bill, typically you'll find CGST and an SGST. Now, what is CGST? Central Goods and Services Tax. It is levied by the central government. The revenue belongs to the central government, but it is applicable in respect of services and goods which are provided within the state. So if you're going to a restaurant or you're buying XYZ from a shop, the buyer and the seller are in the same state. So it's an intra-state supply of goods and services. There'll be a CGST and an SGST levied. SGST is the state government equivalent. And in areas or locations where it's not a state but it's a union territory, you'll have UTGST. Now, SGST and UTGST are mutually exclusive. So you can't have both. You'll have either one or the other. So if you're talking about Maharashtra, you'll have CGST, SGST. And if you have, say, a union territory like Delhi is a union territory, so you'll have CGST and UTGST. Daman and Diu is a union territory. Pondicherry is a union territory. So you'll have CGST and UTGST. Otherwise, typically it's CGST and SGST. Why it is shown separately is because the levies are different. One belongs to the central government and one belongs to the state government. Now we also have IGST, which is Integrated Goods and Services Tax. That's basically when there is a interstate supply of goods and services. So you're buying something from, say, Bangalore sitting in Bombay, or you're buying something from Delhi sitting in Calcutta, IGST would be levied because it's not a sale of goods or a provision of services within the same state. This goes to the central government. Of course, then there is a mechanism by which they distribute this to the states. Number two, also when you're importing goods and services, there is an IGST which is levied. And there is a third category which is supplies to the units of special economic zone. So, sorry, for most of us, basically you'll have CGST and SGST if we are purchasing something from within the same state. Okay. So it's nothing to be, it's not a complicated thing, but in the invoice, which is a tax invoice, which is handed over to you by a restaurant or a shop or whatever you're buying, it will be clearly mentioned. It has to be mentioned CGST this much. So if the tax rate for that particular product is say 18%, there'll be a 9% CGST. There'll be a further 9% SGST, total 18%. But for you, the total is 18%. It doesn't matter. Okay. So as I said, in most of the countries, you have one GST rate or value added tax rate. So you buy any item, it's an X amount, X percentage. irrespective of whether it's a luxury good or an essential good. But in India, and for valid reasons, uh, we've got multiple slabs. Now one can debate and ask whether we need 5 slabs or it can be reduced. But the fact remains that today we've got 5 slabs. So there is 0% for the essential item. We have seen that. We have a 5%. It is for certain items uh, only. And then you have this, on the other hand, you have a 28% slab. The 28% slab is for what are known as luxury goods or services, or in some quarters, they are also known as sin goods. So that is the extreme case. There are very few items, and we'll see which are the items which fit into this. Uh, there has also been talk of rationalizing these slabs. See, GST has been there for 3.5 years, so it's still, it's work in progress. The authorities are still learning, so they have to, if they have to even reduce the rates or rationalize the rates, they'll have to see that there is no loss of revenue. And especially in these difficult times, we had COVID last year, the revenues definitely have fallen. So you have to go step by step. You can't rush into things. The issue, what happens with multiple slabs, is that at times it becomes difficult to distinguish between one slab and the other. So whether your product, especially in products, there's a lot of complexities, whether it's falling under a 5% slab or under 12% slab, because then the tax credits which you get could vary. Whereas if you have just one rate, then there's no confusion. Today, a lot of time and a lot of litigation also has already started in the matter of defining what is a particular slab for a particular product. There have been cases going on in courts, but till the time we have this system, and according to me, even we cannot straight away reduce it to one tax rate. These 5 rates could come down to 3 at the most, possibly. There is already talk of merging the 12% and the 18% slabs to 15%. It's still not happened. But so these give rise to these disputes and complexities. And there have been a lot of notifications which have been issued from time to time defining, which product falls under which tax slave. I remember in my case in L'Oreal Cosmetics. So initially when GST was launched, July 17, they said it will come under 28%. Now it was too high. At that time, our average total weighted average tax was about 21% or so. So it was actually a loss for us, because we were told at the same time not to increase the MRPs of the prices. But then the government realized there were a lot of representations made. They also studied the data, and then they reduced that 28% to 18%. So it was in November somewhere in 2017, it was reduced. So just like the reduction here, there have been many changes which have occurred over a period of time, and they continue to happen. Items get reclassified, the rates change. So it's again work in progress. But today, as we know, there are 5 different slabs. And the worst part is for the last category, the so-called sin goods, they're also subject to a compensation cess, which means it's not only 28%, but plus a cess, which could go up to as high as 15%. So it could be 43% in some cases, luxury motor cars, for example.
Ajay,
And yes, yeah.
no, no. On what basis they fix the slabs? The 12 and 18.
Yeah, so that's a good question, Umaji. See, what happened was, earlier we had excise duty. So primarily it was excise duty, which was a tax on production of goods, and we had VAT, which was the tax payable on the sale of goods in the states. And there were sundry other taxes. So for each product category, what they took was the weighted average tax as prevalent before GST. And then they tried to fit in those rates under these slabs. Now, I remember there was the then chief economic advisor had said that the median rate of tax, GST rate, would be around 16%, a revenue neutral, as they say. So they said if you do 16%, because at that time there was also discussions on whether we can have one rate, which, as I explained, is quite difficult. So they said if it's around 16.5%, it will be revenue neutral. Means there'll be some products which will be cheaper, some products will be more expensive. So there was this analysis and a detailed work done to see for each product sold in the pre-GST era, what was the overall tax rate for that product, and they then try to match it and fit it into these. Now, if you ask me why not 29%, why not 27%, I don't know, but they came to the conclusion that these are the. I remember that 6% earlier it was 6%, then they made it to 5%. There were a lot of tweaking changes which were done, and obviously there were a lot of lobbying also. It was quite a messy and a very complex exercise. But it was mainly linked to the existing total taxes for those products. So as I said, in my case, because I've gone through it in L'Oreal, we had a weighted average of around 20 and a half, 21%. They initially brought it under 28%, but then they realized that 18% is closer. So they brought it to 18%. After realizing that 28% was on the higher side. But at the same time, they also told us that you have to reduce your MRP. You have to reduce your selling price to the consumer. Because as you know, we have this concept of MRP, maximum retail price, inclusive of all taxes. Now, GST also is part of MRP. So the government is saying that if you're reducing, in our case, you're reducing it from say 21%, your earlier tax which you used to pay overall, what are the tax impact on manufacture as well as on sale, that is coming down to 18%, please reduce your prices. And companies had to reduce the prices, and they did reduce the prices. Okay. Now, obviously, you cannot have multiple more than this, so they had to fit into one of these slabs, depending on what was the tax which those companies were paying earlier. Quarter to 5. Now, let's move ahead. Okay, so these are the GST rates. So we have exclude the first one. So we have 5% we spoke about. Those are the common use items, priority goods. That's what the government defined. They said then on the other extreme, you had 28%. So aerated drinks, luxury cars, cigarettes, they come under the sin goods, maximum 28%. But then there is also a compensation cess, which goes up to another 15%. So it's 43%. And then, as I said, for tobacco, cigarettes also is tobacco. They have given themselves the powers to levy additional tax because they know that the smokers will, of course, it's a disincentive as the tobacco gets more expensive. Probably it has some benefit in terms of reduced consumption, but then by and large, it's been seen that the rates go up. The consumer who wants to smoke or who wants to consume tobacco will consume. So they have kept this open so that they can generate additional and more revenue. They also have two other slabs, but it's very specific. So that's why I didn't cover it in the earlier slide I've got it here. So for gold, imitation jewelry, precious stones, they are just fixed 3% GST. And if you see the first one, number one is on agri products, it's 0, and rough diamond, it's 0.25%. But basically, it's, most of the items come under that 12% and 18%, which are the residual standard rates. So unless something which is of priority or essential, it will come at a lower rate. On the other hand, if it's a luxury or sin goods as aerated drinks today are called, then it comes as at the maximum slab. Otherwise, it's 12 and 18%. And as I said, discussions are on. It's been there in the air for quite some time, whether one can rationalize and just have one rate of 15% instead of having two of 18, 12 and 18. Okay. Yeah, so next coming, and there are a lot of concepts, but we are not getting into all that, keeping it as simple and plain as possible. You have this concept which is very regularly used, and that is input tax credit. Input tax credit helps to avoid tax on tax, the cascading effect on tax. So we'll just, have an example. I've got two examples to explain what is this input tax credit, how does it work. So this is the first image, the first diagram. So you have a small time business, or you have a manufacturer who's buying 3 raw materials. Just keep it simple. He's producing something. He's got 3 raw materials. He's paid 100 rupees tax on the purchase of raw material A, another 120 rupees tax GST on purchase of B, and another 80 rupees tax on the purchase of C. Total tax which he has paid when he has bought this from either the same supplier or from different suppliers is 100 plus 120 plus 80, total is 300 rupees. So this is the total tax which he has paid to his to the person from whom he's bought these raw materials. Now he's working on it, he's put labor, and also finally he's selling it. He converts it to a finished product, a very simple example, and he sells it. He may sell it to the end consumer, he may sell it to the wholesaler or distributor, whatever. The total tax on his output on the sale of the finished product comes to say 450 rupees. Now, the 450 rupees is something which he is going to recover from his customer. Okay. But what is the tax which he is going to pay to the government? He's not going to pay 450. He will get the benefit of the tax credit which he has paid on his purchase, and that is known as input tax credit. So on his inputs, for him, raw materials are an input. He has paid tax of total 300 rupees. He doesn't, he gets the credit. He can offset this against the 450 rupees which he has collected from his customer. Net, he pays to the government 150 rupees only. As far as the government is concerned, they have got 300 rupees from the raw material supplier and 150 rupees from this person who's selling the finished product. So this is the basic concept of an input tax credit. So you get 450 rupees minus 300 rupees, which is the total of all the taxes paid on your inputs. The net comes to 150 rupees. This is what has to be paid at the end of the month to the respective state government. We'll take another example just to make it even more clearer and simple. So there is a trader who's dealing in whatever, some electronic item, just keep it simple. So he's a trader, buying and selling. He buys a electronic gadget for say 20,000, and there is a levy of 12% GST. He will pay GST of 12%, which is 2,400 input tax. It's known as the input tax because it's an input for him. The total amount which is going to be billed to trader, 22,400, 20,000 plus 2,400. Okay. He's into buying and selling, as I said. He will sell it. He plans to sell. He actually managed to sell it for 30,000 rupees. So what happens in the case of the sale transaction? So he sells for 30,000. He's registered under GST. He has to levy GST of 12%. It's the same product. So 12% on 30,000 is 3,600. He'll collect this. He'll collect a total of 33,600 from his customer. Now what happens? There's an input tax which he has paid of 2,400. He gets a benefit. So ultimately, what is the net tax which he pays to the government? The net tax is not what he has collected from his customer. It will be the net of 3,600 minus the input tax. This is 1,200 rupees. 3,600 minus 2,400, net is 1,200 rupees only is what is paid by the trader. So as far as the government is concerned, it has collected a total of 3,600 on the transaction of the sale of that electronic gadget, but their entire 3,600 has not come from our trader friend. It has come 2,400 from the person who sold this to the trader and 1,200 only from the trader, because he's already paid 2,400. He doesn't have to do it again. So very simply stated, this is how the input tax credit works, and this is how you avoid the cascading tax effect, because there is no tax on tax. The tax is paid only on the value addition. In this case, the value addition is just the profit margin. 20,000 kamal, 30,000 mein becha. Again, I put this chart, but it's not wanting to complicate. So it's not that you can take a set of input tax credit straight away. So as I said, there is a CGST. So CGST credit, if you have, it has to be utilized first for the payment of CGST and then for IGST. Similarly, for the rest, the bottom line is that the credit of CGST cannot be used for the payment of SGST. It has to be utilized against CGST only or IGST if at all. And similarly, the credit of SGST cannot be utilized for the payment of CGST. So what happens in some cases, you don't have enough output tax to set off. So what do you do then? In that case, you have to apply for a refund from the government. because in most of the cases you may be able to claim a set off. If, for example, your output tax, your input tax is higher than the output tax, you cannot avail of the credit, you need to apply for a refund. Simple terms, that's the way it works. Now let's come to this. I've deliberately put these sample invoices. So you can see this is a tax invoice, accommodation charges 4095 in a hotel. Now hotel is, the rates have changed. So what they have done now is started at higher rate. Now it's, so if it's up to 1000 rupees, then there is no GST. If the room charges are from 1000 to 7500, it is 12%. And if the room tariff is more than 7500, then GST is 18%. It started with 28% and they've rationalized it and reduced it. So in this case, what happens? The total room rent is 4095. Total GST will be 12% because it's falling in that under 7,500. 6% will be CGST, and another 6% is SGST. Total amount which is payable by the person who stayed here is 4,586. As you can see at the bottom, we have this code, and this is HSN code, SSC code. So SSC code is basically just, it's a code to define the particular service or the goods which have been sold. So SSC code is a services accounting code, and HSN, so it's in respect of services. HSN code is in respect of goods, a harmonized system of nomenclature. So each of the products or the services which you're supplying, those need to be coded so that the classification becomes easier, and then the rates are fixed as per the codes. So this is one example. Next example, again, on the one on the left, you have an MTNL bill. Again, the GST is 18%. The monthly charges are 200. You can see the circled one, 9% CGST, 9% SGST. Total is 236 rupees. And similarly, you have another restaurant bill, total 1950. There was a code is given there, and CGST, SGST, 9%, 9%. So most of the items, even for services, in fact, you'll find the rate is 18%. This you would have seen all the, in some cases, what happens is the GST element is not shown separately, but if it's a tax invoice and the person is registered under GST, then they have to show the split of CGST and the SGST in their invoice, which is supposed to be a tax invoice. What happens in the case of income input tax credit is that all the assessees or all the taxpayers are supposed to file their returns. So if I take the earlier example where the trader is buying for 20,000 and selling for 30, yeah, and he's saying that I've paid X amount to my to the seller, to my to the person who sold to me. What the system does is it will match. So you may say, okay, I've got 2,400 input tax credit, so I've paid only 1,200, but the returns are filed on a monthly basis. The system, and it's all totally automated, and really it's a marvelous piece of work developed by Infosys. And you can imagine the volume of transactions, the number of assessees. The system matches the input tax credit. So if a seller is showing something, it is matched, and he's claiming input tax credit, that is matched with what the other party, the counterparty, is showing as tax. And if it doesn't match, then one doesn't get the credit, and you can even be questioned as to why you're misreporting or why you're showing a higher input tax credit. So it's seamless. It's not something which you can just fool around and show something. If you're showing something which is wrong, which is false, the system will catch you, and it will disallow the credit which you're trying to claim.
Ajay?
Yeah.
Yeah, by credit you mean the tax he paid from while buying the goods, no?
Absolutely. So in that case, the trader has bought some gadget. He has paid 20,000, 12%, 2,400. When the seller of this gadget, he's also registered under GST. He also needs to file the return. He will say that they have to give invoice-wise details. So he will say that I have sold a gadget to this trader. The total tax I've collected is 2,400. That 2,400 will be matched with what the trader shows as purchased, the tax paid on this purchase. If it matches, then the credit will be allowed. Otherwise, it will be disallowed. So that's very simply the way it works. There are of course a lot of terms and conditions attached to it. Now we've got just 3 or 4 minutes. Quickly, I'll go through the thresholds, not getting into the complications. So what are the thresholds? Today, the threshold is 20 lakhs. That's the aggregate turnover in a financial year. And there are certain states, northeastern states like Manipur, Mizoram, Nagaland, Tripura, where the threshold has been reduced to 10 lakhs. Now, the basic limit is 20 lakhs, as I said, but from April 2019, it has been increased for certain categories only to 40 lakhs. But that is only in respect of supplying of goods. If it is supply of services, then the threshold remains as 20 lakhs. And of course, in this case, what is taken is the aggregate turnover in relation to your PAN. So if you, for example, if you have a turnover and you're selling in 2 states, Maharashtra, Tamil Nadu, you have 15 lakhs turnover in Maharashtra, for example. Say you have 7 lakhs in Tamil Nadu, the total is 22 lakhs. In each of the states, you're under 20 lakhs, but your aggregate is more than 20 lakhs. It's 22 lakhs. So you need to register in both of the states. So it's very clear. And so that is as far as the registrations are concerned, the threshold limits for compulsory registration. And there's also composition scheme. So people who want to avoid the nitty-gritties, filing returns, getting into the complexities, if your turnover is up to 1.5 crore, and for certain northeastern states, Himachal Pradesh, it is 75 lakhs, you can opt for the composition scheme. Composition scheme is nothing that you have to pay, is nothing but the taxes payable at a certain rate. But very important, you cannot claim the input tax credit. And it is not available for certain categories like manufacturers of ice creams, pan masala, tobacco, a person who's making interstate sale. It has to be within the state, so on and so forth. So these are basically the rules and regulations. There's a threshold. If you're below that, it's up to you. You don't want to register. You're free not to register. If you want to register, if you're below the threshold, you can also register under the composition scheme. But then there are certain restrictions attached. But you want to, and you cannot charge, you cannot claim ITC, you cannot make a tax invoice, you cannot charge GST. You just pay a fixed amount to the government. And what is the fixed amount for manufacturers, traders is just 1%. So somebody, small time trader, he say, I don't want to get into this janjat. I will just pay 1% every month, every quarter to the government. I'm fine with it. I don't want any input tax credit. Restaurants not serving alcohol, it is 5%. There are other service providers, there's a provision, there's a proposal, but it is the notification yet to come, that is 6%. So that's in a nutshell the rules and the norms regarding GST. So I hope it's I've kept it simple, and you'll have got a better understanding of GST than what you had about an hour back. And Umaji is nodding her head and smiling. But anything else, Leo? Good to have you. And Anup is also there. So
Hello.
any queries before we wind up? It's fine.
I have a question.
It was not too heavy. Yeah. Yes, ma'am.
Can I talk in Hindi?
Yeah, बात कीजिए जरूर.
एक बात बताइए कि अगर आप बिजनेस कर रहे हैं, आपका अभी 2 करोड़ हुआ लास्ट ईयर, और ये अभी ऐसा प्रॉब्लम हो गया कि कोरोना के चक्कर में बिजनेस आपका बिल्कुल डाउन हो गया, मतलब 25% भी नहीं रहा, then what is the rule and regulation for GST कि भी क्या करना चाहिए?
See, once you have registered, then till the time the registration is cancelled, आपको return भरना पड़ेगा.
अच्छा.
तो एक provision है कि registration cancel हो सकता है, but then there is a process for it.
Okay.
तो मेरा एक दोस्त है, वो भी सर्विस कर रहा है, कंसल्टेंसी कर रहा है, लेकिन वो बोलता है मेरे को मैक्सिमम 8-9 लाख होता है for the year. And I want to stop that registration. So he's in the process of cancelling that registration. जब तक वो registration है, you have to file the return. And now the government has made it easier to file nil returns. If you have nil output turnover, then you can even file via SMS, for example. So it's very simple. But there's a process to close. जब तक आप registered है GST में, आपको return file करना है, और कोई tax जो है वो आपको करना है.
Okay, thank you.
Thank you, ma'am. And I think so.
Housing societies also have got
many of us. But if there's any question, yeah, Leo, you're saying something, Leonard?
Yeah, housing societies also have got to pay GST, no, on certain.
Yeah, there are certain
housing
conditions.
societies.
Yeah, there is some certain conditions to that. You're right, Leo. We had a AGM and we had discussed it very recently, but it's not still finalized, I suppose.
Okay,
So
okay. There's something on
you're
sinking
right.
fund they were saying. Yeah.
Yeah, right. It's
Right.
still not clear. See, what happens is there are a lot of provisions, proposals which are approved, and we have this GST council. We've had marathon sessions, we have multiple GST council meetings. So they propose something, they agree, but then it has to be converted to law. It has to be notified. So on this particular thing, to the best of my knowledge, it's not being done.
Okay.
Yeah. And it's a vast and a very complex subject, let me tell you. And I don't think anybody can say that I'm an expert, I know all the provisions. It can be very complicated. But for us, for our sort of profile, it's good to know what is GST. At least when you're getting a bill for whatever service or product, you can check and verify and satisfy yourself that you're not being overcharged. Just that way. There was this thing on restaurants, service charge. The service charge has got nothing to do with GST. It's different. Okay, I think yeah.
Yeah,
Yes,
we
ma'am.
have to end this session.
I thought Isha is going to ask a question, but she is impatient. She's saying we have to end. I totally agree with her. And I was actually not expecting that this will go even beyond 1 hour. So, ladies and gentlemen, thank you once again. Dhanyawad इधर आने का और ये inaugural session करने का GST का.
Yes, sir.
Thanks a lot.
Thank you.
And
Till
you
we
made
meet
it very
again,
interesting
goodbye.
also.
Thank you very much.
Thank you, Ajay.
Take care.
Thank you. Bye.
And we'll
Take care.
Thank you.
meet again. Take care. Bye.